Imagine you followed every rule and somehow the market still flipped against you. The problem isn't your strategy, it's what you can't see in the volume. Today, I'm going to show you an advanced volume indicator that reveals what's really happening behind each move, called the Welkin Advanced Volume Study. This tool is based on volume spread analysis, a method that looks at the relationship between volume and price spread to uncover the truth behind market moves. Instead of just showing you if the volume is high or low, the Welkin VSA indicator analyzes how that volume interacts with price movement. It color codes every volume bar based on its strength and significance, so you can immediately tell when a move is strong, weak, or manipulated. You'll notice that white or magenta bars indicate ultra-high volume. This often signals strong institutional activity or potential reversals. We'll later also take our trades on these bars only. Gray bars represent low or uncertain volume, signaling a weak or indecisive market. When you enable the buy-sell strength option, you can even see whether the majority of that volume came from buyers or sellers. It's like having an X-ray for every candle on your chart. The other key settings you'll want to pay attention to is, firstly, turn Ignore Extended Hours on. This removes any pre-market or after-hours noise, keeping your data clean. And then, one of the most powerful features is Show Higher Timeframe Strength, which overlays higher timeframe volume data directly on your lower timeframe chart. This helps confirm whether short-term moves align with the broader market sentiment. The average volume period is set to 20 by default, which works perfectly for short-term timeframes like 3-minute or 5-minute charts. If you trade longer-term setups, you can increase it to 50 or even 100 to smooth out the data. Finally, the relative volume threshold is set to 1.25. This means if the volume on a candle is 1.25 times greater than the previous one, it will be highlighted in yellow, signaling potential momentum buildup. When it comes to time frames, scalpers should stick with 3-minute or 5-minute charts and keep the 20-period average volume setting. Day traders and swing traders can use higher time frames like 15-minute or 1-hour charts, increasing the average volume length for more consistent signals. Now let's talk about how to actually trade using this indicator. For a buy setup, start by waiting for a candle with volume higher than usual, which is going to be magenta or white color on most cases. This tells you there's strong activity in the market. The candle should close with a wick on the downside, showing buyers are absorbing sell pressure. Then wait for the next candle. If it closes at least 40% inside the previous candle's body, that's your confirmation. Enter your buy at the close of that candle, set your stop loss below the previous candle's low, and target at least a 1-to-3 risk-to-reward ratio. You can also let the trade run until you see rising sell volume or higher timeframe sell strength increase. For a sell setup, look for a high volume candle with an upper wick, showing rejection and selling pressure. Then, wait for the next candle to close 40% or more inside the previous candle's body. This confirms that sellers are taking control. Enter a sell at that candle's close, place your stop loss just above the previous candle's high, and aim for a 1-to-3 risk-to-reward ratio, or hold until buy strength or higher timeframe buy volume starts increasing. If you enable the buy-sell strength or higher timeframe volume settings, you can even manage your trades more intelligently. If you're in a buy and the higher timeframe buy volume stays strong, keep holding your position. But if you start seeing sell volume build up, it's time to tighten your stop or take partial profits. To quickly summarize, look for unusually high volume candles, confirm with wick direction, and wait for the next candle to close at least 40% inside the previous one before entering. Place your stop at the previous candle's high or low, aim for a minimum of 1-to-3 risk to reward, and use the buy-sell strength or higher timeframe volume for confirmation and trade management. And that's how you use the Welkin Advanced Volume Study to trade smarter, not harder. If this video helped you finally see what's really moving the market, make sure to hit the like button, subscribe for more trading breakdowns, and comment below which indicator you want me to explain next. Remember, price can lie, but volume never does.